Okay, so we're going to start with just basically understanding that learning objective 2 is really about understanding manufacturing costs. Okay, and once you understand manufacturing costs, you'll be able to understand the second part, which is the difference between something called a product cost and a period cost. So we have to go back in our minds. This is about manufacturing. This is about the actual creation of goods, right? So, and manufacturing happens on a lot of different ways. It happens at your local bakery for bread. And of course, it happens in the making of automobiles as well. And so manufacturing is any particular business that makes products, okay? And so this is what we're focused on. So managers have a lot of questions, okay? One of the questions they'll have is they have to track the cost of a product. So what costs are involved in making something is one of the big questions that they have. If I produce more of it, right, will the costs go up or down? If I produce less of it, will the costs go up or down? Okay. What if I use fewer people and more machinery to make my products? Will that affect the cost? Will costs go up or costs go down? And once we know that we're going to have a bunch of costs, which we know everything that we produce is going to have a cost, how do we control those? How do we minimize those costs and still make the best quality product that we can? All right, so let me activate my pen. And we're going to move on to these slides. So here's how it works in manufacturing, okay? Anything that's created in a business is a manufacturing business. So any activity and any process that can convert a raw material, say like wheat, into a finished good, say like a loaf of bread, or a raw material like iron and make a finished good like an automobile, right? Or any other type of raw material, sugar, for example, or cotton, and with a finished good of, say, a soft drink or a piece of clothing. Right. So this is the process that we're looking at within manufacturing. That's what you have to really accept in this class. This class is going to be lots and lots of information about manufacturing, the making of stuff. So we look at 3 different costs, okay? First is the actual materials that we need to make what we're making. And so that's very, very important to know. So raw materials, could be anything from, like I said, flour in the baking of bread, steel in the making of automobiles, sugar and syrup in the making of soft drinks, cotton in the making of clothing, crude oil in the making of gasoline or other lubricants. Well, I think the book starts off with a great example of a company that produces kayaks called Current Designs, the name of the company. And they actually use a polyethylene powder to make their kayaks. And so that would be a direct or a raw material that they would need in order to make that. So direct materials tend to be raw materials that are needed to actually make something. And then, of course, you have another cost called direct labor, okay? So in this case, any work by employees that actually go into making the product. Now that's different in manufacturing than it is in other industries. Because here, if you work on an assembly line, if you're a baker, for example, in a bakery, you are direct labor. But if you are the bookkeeper in a bakery, that same bakery, you're keeping the books, you're not direct labor because you are not directly involved in making the product. So when we say direct labor, we're talking about directly involved in creating the finished good, okay? Directly involved in creating the finished good. So if you're not directly involved in it, you're called indirect labor. Okay, and we're going to get to that momentarily as well. And then the third cost is the actual cost of manufacturing the product. You'll need, for example, a factory. You'll need equipment. You'll need machinery. You'll need to have, maintenance on that factory floor. You'll need to pay taxes on that factory. You'll need to clean that factory, clean the machines, etc. If it's directly related to the product through where it's made, it's manufacturing overhead. So in reference to direct materials, there's there's a couple of classifications. I already went over what we call raw materials, right? Stuff that's used directly in making the product. So you need wheat or some type of flour to make bread, so that's a raw material. And that basically is in a somewhat of a separate category. Direct materials need to be physically and directly associated with the finished product, okay? If it's not, it's considered something called an indirect material, which we'll talk about briefly. Indirect materials are materials that are also used, but they're not physically part of the product. Or they might be part of the product, but it's so tiny, minute stuff that it's hard to calculate any type of cost, okay? So if there are any indirect materials, again, things that are used but are not physically part of the product, things that might be part of the product, but they're so small that they can't assign a cost to them. So they're going to be thrown into the manufacturing overhead category. Okay, they're going to be thrown into this category if it's an indirect material. If it's a direct material, it's going to be thrown into this category. Okay. Labor also has direct labor and indirect labor, as I mentioned earlier. Direct labor, these are the employees who are physically and directly associated with converting the raw material into the finished good. Okay, like I said, the baker at the bread shop is directly associated with making the finished good. However, as you know, organizations are quite large. They have lots of different labor. Indirect labor is work of employees that have no physical association with the product, okay? And so, factory maintenance people have, they're in the factory and they're cleaning things up, but they're not actually making the product. A factory supervisor or a timekeeper, they're in the factory, yes, but they're not associated physically with the product. And so there's differences between what we call direct labor and indirect labor. Manufacturing overhead is basically all the other costs that are indirectly associated with actually creating a finished product, okay? So basically, that's basically all the different costs except the two others that we looked at, direct material and direct labor, okay? Manufacturing overhead is also known as factory overhead or indirect costs or burden. These are other terms that are used, but this particular book uses manufacturing overhead, and that's the term you have to know. Why manufacturing matters for US workers. This is a really good story. It's on page 9 in the textbook, but it's also here on the slide, and it's really good. So let's take a peek. Prior to 2010, US manufacturing employment fell at an average rate of 0.1% per year for 60 years. However, at the same time, factory output, right, how much was produced is output, factory output increased at average 3.4%. Well, why? Well, as manufacturers relied more heavily on automation, the number of people that they needed declined. However, factory jobs are very important because the average factory worker makes $22 an hour, which is twice the average for the service sector. Okay, so that's an important piece there. Fortunately, manufacturing jobs actually increased in 2010, and they are forecast to continuing increase through much of the 2010s. Why? Well, because companies like Whirlpool, Caterpillar, and Dow are building huge new manufacturing plants in the United States to replace the old ones. And for many products that are ultimately sold in the US, it just makes more sense to produce them here and save on the shipping costs, particularly if it's a brand new plant, okay? So the efficiency of these plants combined with experienced workers make it possible to do manufacturing here in the United States and compete with other countries. Oftentimes we have this feeling that, well, if it's going to be manufactured, we can't compete with low-cost countries like China. Well, that's not true. And this is one story that actually will tell you that we actually can, with newer equipment and efficient workers, we can do a lot. We can do a lot. Okay, so the three first terms that you had to learn: manufacturing costs, that are direct materials, direct labor, and manufacturing overhead. The next thing you have to know about is something called product costs, okay, product costs. So these are all costs that are integral part of producing a product, okay. Product costs include those three categories that we just reviewed: direct materials, right? Direct labor. Again, the word direct tells you that they are directly involved in producing the product. And manufacturing overhead, anything, all other costs basically that are involved in the factory production of a product is manufacturing overhead. So these components are considered product costs because they are directly related to the product. Now, the wonderful thing that manufacturing does differently in accounting than what you learned in financial accounting, because we only talked about retail, We only talked about inventory in terms of retail. But actually, all of these product costs are inventory for manufacturers. Okay, so all of this gets put into the inventory account. Direct materials, direct labor, manufacturing overhead, basically are asset related components of the account. Okay, because all of this is inventory to a manufacturer. Once the manufacturer has finished goods, for example, once Ford or Tesla produce their cars from the factory and they sell them to the distributor or the retailer, then they become cost of goods sold. In the meantime, while they still own them, they're part of their inventory. Okay. So this is a new component for manufacturing that you didn't know. The other types of costs are called period costs. Period costs. Well, period costs basically are not product costs in a nutshell. They're everything else to do with non-manufacturing costs. And what is that? Basically, all the selling expenses that a company has, all the administrative expenses that a company has, just to run the business. These are considered period costs versus product costs. So these are just associated with a particular period of time, not specific to a product. Product costs are specific to a product. So this illustration is on page 10 in your book, if you have it. If not, you'll see it in the slideshow and in your reading. And it basically shows the differences between product costs, which are specific to manufacturing costs, and period costs, which are other costs that are not manufacturing costs. Okay. Now this is important. This illustration is particularly important for your homework in this chapter, this part of the chapter, because they're going to ask you in your homework to identify direct material costs, direct labor costs, manufacturing overhead costs, selling expenses, and administrative expenses. They're going to ask you specifically, can you identify what these accounts are? And that's why this particular illustration is very important to you. So let's take a look. Okay, this, by the way, if you're following in the book, we're on page, well, this is 10 and 11 kind of combined. Okay, so let's suppose you started your own snowboarding factory. Okay, KRT boards. Hopefully you're not bored with this. Oh man, that's tough, Arujo. You can't start us off that way on a Wednesday. Yes, I can. Here are some of the costs that your snowboard factory would incur. And your job is to assign the following costs. Are they product costs or are they period costs? If they're product costs, they're either going to be direct material, direct labor, or manufacturing overhead. The first one, the cost of the materials for the board. Okay, well, that sort of gives you a hint because they use the word material here. Okay, so this is going to be a direct material cost. Okay, so this $30 per board is a product cost, specifically direct materials. Okay, this is a very good illustration because this is also, like I said, I'll repeat, it's in your homework. Labor costs, again, they use some keywords here. Per board, $40 a board for labor costs. So labor costs, this is directly involved with getting the board done. And so this is going to be a labor cost, direct labor. It's a product cost for direct labor. Now, depreciation on the factory equipment. The factory equipment is used directly in manufacturing the product. And so they would be part of the manufacturing costs, the product costs, but it's part of the overhead in this case. Okay, because it's on the factory equipment. The factory equipment is used to make the product. So it's a product cost, but it's not material, it's not labor, it's overhead. You doing okay so far? Are we doing all right? A lot of folks have gone to sleep.
Yeah, it's pretty good.
Okay. Yeah, we're getting there. All right. Continuing. This is on page 11. If you have the book with you here, let me see if I have a comment here. Very good. Okay. Well, thank you, Kat. Way to go. Very good. All right. So here we have number 4. This is the property tax on the factory building. So we need the factory to make the product. It's a product cost, okay? But it's not material, it's not labor, it's overhead. And so taxes on the building, the actual factory itself, is manufacturing overhead costs, okay? Advertising costs are listed next. Advertising costs are, you see a commercial or a billboard or whatnot. Well, they're not materials, they're not labor, they're not directly related to the factory. And so they're going to be period costs because these are basically selling and administrative expenses. And so that's going to be where we would put this. Let's see. Period. Good. Yes, exactly. Number 5 is sales commission. Again, sales is specifically selling the product, not making the product. Product costs are about making the product. And so your sales commission is about selling the product. In this case, it's going to be part of your period costs. Okay. Number 7 is maintenance salary. So these are factory workers, but they clean the factory. So they are not direct labor. They are indirect labor. And indirect labor is going to be part of your overhead, manufacturing overhead, because they're not directly making the product, but they're cleaning up the factory that directly makes the product. So it's a product cost, manufacturing overhead. The plant manager's salary, well, this again is, the plant is the factory. Okay, the word plant and factory is the same in accounting. And so in this case, this is also part of manufacturing overhead. The plant manager doesn't actually, is not direct labor because this particular person isn't directly making the product, but rather supervising the entire factory. So that's why it's manufacturing overhead. The cost of actually shipping those boards out. So once they are sold, they need to be shipped. Well, the shipping is not about making the product, right? The shipping is about selling the product. And so in this case, the shipping would be a period cost. Okay.
I have a question.
Yes, go ahead.
So the property taxes on the building, I thought that would be period cost, but I just want to clarify. So like it's part of the product cost because you need the building in order to make the product.
That's exactly right. Yes. So because it's taxes on the actual factory and the factory is needed to make the product, it becomes a product cost.
Okay, thank you.
So that's exactly good thinking, really good thinking. Any other questions before we move on? Okay. So I need you to remember this list here. Sorry, wrong button. I need you to remember this list of 9 things, those 9 costs, because it's going to make following this illustration a lot easier. This illustration is also on the bottom of page 11 in your book. And it says, look, if we produce 10,000 snowboards, what's our total manufacturing costs? Okay, well, that's where you need that chart for. Manufacturing costs are going to be your period costs plus your product costs put together. So first of all, you know that the material cost is 30 bucks a board, and you're going to make 10,000 boards. So the cost of the materials themselves is $300,000. Does everyone understand how we got that?
Could you repeat the, you said manufacturing costs are something plus something else?
Oh yeah, the total manufacturing costs are going to be all your product costs plus your period costs together. Okay. All right. And you'll see that here. So here we have labor. We know that it's going to cost us 40 bucks for labor costs per board, and we're making 10,000 boards. And so labor costs are going to be $400,000 in total. The third thing we know is we are going to have depreciation on the factory equipment. Now, this was number 3, and this is given to us per year. And so we can actually just calculate that out. Depreciation on the factory equipment is $25,000 for the entire year. And so that's going to be our total cost for the 10,000 boards for the first year. The fourth thing we know is the property taxes on the building is $6,000 for the year. And so again, it's a yearly figure. We're doing the total costs for the first year. We can simply add the $6,000 property taxes to that, and we're all set. Number 7, in this case, oh, okay, actually, let me go back. Who was the last person to ask me a question? Was that Daniel?
It was me, I believe.
Hector, okay, sorry, thank you, Hector. Let me go back and correct myself on something that I said. Your total manufacturing costs are all your product costs added together. So that's your direct material, direct labor, and overhead. It does not include the period costs. So I misspoke, and I wanted to correct myself while I caught it. Okay, I'm sorry about that.
Thank you.
It's strictly the manufacturing costs are strictly all your product costs, materials, labor, and overhead. So I apologize and thank you for being so forgiving. So the maintenance salaries of all the factory facilities is $45,000 for the year. That's manufacturing overhead, and so that's going to be part of the cost here. And the salary of the plant manager is also indirect labor, and so that goes under manufacturing overhead, and that's also going to be part of that. So here we have direct materials is number 1. Direct labor is number 2. And 3, 4, 7, and 8 represent manufacturing overhead. The 3 parts that we talked about for manufacturing costs. The total is $846,000. You'll see that at the bottom of page 11. And I just want to make sure I didn't confuse anyone with what I said and everyone is able to follow this okay. So can I get at least maybe a thumbs up, thumbs down? Anybody? Okay. A thumbs up. Makes sense. Okay, good. Okay, great. Thank you. And I, again, I hate to misspeak because this stuff is tough enough. So I hate to misspeak. My job is not to confuse you, it's to help you out. All right, so good. So we're going to move on then to the do it exercise. So we're going to really, I'm just going to focus on this for today. I want to make sure you get this stuff down because we're going to be doing some heavier stuff on Monday. Learning objective 3 in this chapter is a bit heavy. It's a little bit heavy. And then learning objective 4 is like, you know, not a big deal. So I wanted to break it up. Some of this today, some of this Monday. So if you have your book with you, I'd like you to go to page 12. This particular do it exercise is on page 12 in your book, okay? And of course you have it here on the slideshow and we're going to show you. So here we have a bicycle company, bicicleta, has the following costs, right? Tires, salaries of the employees who put the tires on the wheels, factory depreciation, advertising expense, lubricants, spokes, the salary of the manager, the salary of the accountant, the actual handlebars, and the salaries of the maintenance employees. And they want you to classify these as either a direct material cost, a direct labor cost, manufacturing overhead, or if it doesn't fit into this, which are product costs, right? It would be a period cost. Right? And so when you look at the actual tires themselves, where would that fit in? Well, it should fit in under direct materials because this is the bicycle company, they're making the bicycles. So tires are direct materials. When you're looking at the salaries of the employees who actually put the tires on the wheels, that's going to be direct labor. Oh, sorry, it doesn't show up that way. All right, but that's going to be your direct labor. That's going to be your direct labor. But since this actual screen lists other direct materials, let's figure out which ones are the direct materials. And I have a couple of chat things here. All right, good, good. The spokes are definitely part of the direct materials as well, as you see. And there's another one, the handlebars. Okay, the handlebars. So these are the actual direct materials, the tires, the spokes, the handlebars, that would go under the direct material costs. Good, good. Now for direct labor, again, these are folks that are directly related into putting the bicycles together. We're looking at the salaries of the employees who put the tires on. Okay. So that's the only direct labor costs that we have. We do have a lot of overhead costs here, okay? The overhead costs include the factory depreciation, yes? The lubricants, the salary of the factory manager, the salary of the maintenance employees should all be part of the overhead that this company has for these bicycles, okay? Now, in terms of the actual period costs, well, that's advertising expenses, that's a period cost, and the salary of the accountant. The accountant is not, it does work for the company, but is not directly related in making the bicycles. So that is a period cost. It would just be a selling and administrative expense, that salary. So this is how things are broken up here for learning objective 2. So what I'm going to do is actually stop the share, bring us to our main course here. I'll ask everyone to populate, if you could, turn on your cameras. And I'd like to find out if there's any questions.
None so far.